The most recent feather to Cardano's cap is the Jed stablecoin. After much anticipation from the Cardano community, the network developers have finally launched the ecosystem's over-collateralized stablecoin. The stablecoin launch came in after a successful audit and development testing for over a year. However, this new stablecoin has spurred the fears of a significant crash, which happened last year. What seemed to have been long forgotten is now pasted in the memories of various people and companies. In recent times, Cardano has been gaining traction as a major player in the crypto sphere. The Jed stablecoin has effectively generated a fair share of buzz, further earning the network its recognition as a pure proof-of-stake consensus mechanism and status as a top 10 cryptocurrency by market capitalization. However, there seems to be some sort of complicated situation as the events of last year come rushing back to people's memories. This is quite strange. The major event that drove major fortunes away from the Terra Luna crash, and now according to certain people, the newly launched Jed stablecoin is about to repeat that event. Remember Terra Luna? This was a cryptocurrency that failed to live up to its hype and ultimately faltered. Last year, stablecoins sent shockwaves through the cryptocurrency markets, wiping billions of dollars of their value and causing liquid cryptocurrencies such as Bitcoin to crash, and also caused people to lose their savings. The two main stablecoins from the crypto project Terra went to freefall, with some calling the event a Ponzi scheme in sync with the collapse of Lehman Brothers, which predicted the 2008 financial crisis. Stablecoins claim to be relatively safe in the highly volatile crypto market. Of course, they are expected to be tied to a fiat currency and usually maintain a 1-to-1 peg with the US dollar, but last year's crash rendered these attributes useless. Terra USD crashed almost completely at one point on a Thursday, losing its $1 peg to the dollar and taking to a miserable low of 26 cents. Before the event, Terra was ranked among the 10 most valuable cryptocurrencies and peaked at 120. Meanwhile, its sister token Luna fell by more than 97%, dropping below 22 cents before finally collapsing to $0. UST is an algorithmic stablecoin, which implies that instead of having cash and other assets held in reserve to back its token, it utilizes a complex code and Luna to regulate the process. An author, David Gerald, said, "The idea of an algorithmic stablecoin is instead of having a backing reserve, you have a sort of messy, lower quality banking reserve. It's a way to claim that you are building a stable thing out of unstable things." He also added that Luna was supposedly a governance token, which is the way to pretend that made-up Ponzi money is not made-up Ponzi money. Things got even more complicated after Terra's creator Kwon purchased $3.5 billion worth of Bitcoin to support UST in case of a major crisis. Many wondered why he did such a thing. In a series of tweets, Kwon addressed the situation. "The price stabilization mechanism is absorbing UST's supply, over 10% of the total supply, but the cost of absorbing so many stablecoins at the same time has stretched out the on-chain swap to 40%, and Luna's price has diminished dramatically, absorbing the ARBs. He added that the only way forward was to absorb the stablecoin supply that wanted to exit before UST could start to repeg. However, the compelling aspect of the story was how it relived the events of the 2008 financial crisis. David Gerald once again said, "I think the compelling part of this story is that they had a small 2008 financial crisis themselves. And now, the Jed stablecoin is expected to relive the 2021 Terra Luna collapse? It just doesn't make sense. I've never thought about what would happen to me if this fails." Kwon added that his confidence at the time was justified, as the market success of his Terra ecosystem was inching close to $100 billion, and he admitted that his faith seemed super irrational, but according to him, Terra was not a Ponzi scheme because the earliest investors were among the hardest hit by the crash. Kwon noted that he could not quantify his losses, but described being down infinite, whatever that means. He also contended with the possibility of a mole at Terra. Quote, "If you were asking me whether there was a mole at Terraform Labs, that's probably yes. Whether somebody tried to take advantage of that particular opportunity, I would say that the answer is yes. But if those opportunities existed, then the blame is on the person that presented those vulnerabilities in the first place." Before the crash, Kwon had moved to Singapore with his wife and child and claimed that the decision was made out of fear for the safety of his family. He told CoinAge, "So what are we going to do is we are going to just put the facts out as we know them. We are going to be totally honest and deal with whatever consequences as they may be." There's nothing new about the wild volatility in crypto prices. Investors were just caught by surprise by the sudden drop in Terra USD's price because it was a so-called stablecoin. This begs the question, are stablecoins really stable? The most high-profile stablecoin is Tether, of which was around $75 billion in circulation. This price level made it the third biggest cryptocurrency behind Bitcoin and Ethereum. Tether is also pegged to the dollar, meaning its value is supposed to remain stable at $1. This equally provides investors with a way to exchange cryptocurrencies such as Bitcoin and Ethereum on exchanges without converting the money to regulated fiat currency. Tether claims its tokens are pegged at 1-to-1 with a matching fiat currency and are completely backed by its reserves, the majority of which are made up of cash and cash equivalents. On the flip side, as crypto prices can be highly volatile, maintaining a 1-to-1 ratio requires that these stablecoins are backed by more than 100% of their value, as collateral could dip in value. The demise of Terra USD casts serious doubt over the stability of stablecoins. Massive withdrawals of Terra USD, along with a long trail of worries about cryptocurrencies and a steady fall in prices, saw Terra lose its peg to the dollar. The chief marketing officer of NiceHash told a new report that Terra USD was never really a stablecoin from the start. It was an attempt to make something that appeared to be stable that tried to peg to the dollar as much as possible, but by being backed by their own currency instead of US dollars, it was a recipe for disaster essentially, he said. While there are many stories of people losing vast amounts of money, some of their entire life savings in the Terra Luna crash, a similar scenario would cause even more financial havoc. As it currently stands, the Terra crash is nonetheless the most volatile event in the history of cryptocurrency. The Jed stablecoin just recently launched, and the question that everyone has to ask is it at the same risk of sharing the same fate as Terra? If there is anything the Cardano development team is known for, it's for taking the proper time to vet various upgrades and releases. In that regard, there is probably a lot of love about the Jed stablecoin. Even Cardano ADA's token rallied roughly 5% immediately after it was announced that the stablecoin hit the Cardano mainnet. Whether Jed will be able to weather the storms that plague Terra and become a stablecoin that can avoid losing its peg remains to be seen. But there is so much trepidation for a stablecoin that has just recently hit the mainnet. Don't be quick to forget about what the bulls think about the stablecoin. It has been noted that decentralized algorithmic stablecoins can be a big trigger for Cardano, since it could become the foundation for other opportunities for the Cardano ecosystem. It is expected that about 40 partnerships will materialize around the Jed stablecoin because it is set to introduce dynamic fees and pricing to the Cardano ecosystem, and this development is tantamount to increase the demand for the ADA token. The super plans of the Cardano founder, Charles Hoskinson, and his team will hinge on Cardano's ADA token avoiding a death spiral scenario, similar to what we saw with Terra, and that's where uncertainty comes in for investors. Can Cardano avoid the devastating fate of Terra? It is really hard to say. It's difficult to predict how Jed will be able to perform relative to other algorithmic stablecoins that came before it. Also, it's not easy to say that Cardano's Jed stablecoin has the upper hand, knowing what went wrong with previous collapses. And sometimes learning from mistakes of others can be extremely valuable. Despite the odds, there is still room to stay confident about Jed. It will thrive in the long term, and the Cardano team has a historical record of applying an ultra-conservative approach to its upgrades. For now, we are motivated to believe that the Jed stablecoin won't collapse, so you can let go of the fear for now. But of course, what are your thoughts on this? Let us know down in the comment section below. We'll see you in the next video, but before then, check our other videos to find out why Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe notification buttons.